we're live, 4/23/2019. We've got Cody, we've got Matt, we've got myself, Coach Tim here from Tackle Trading. It's our daily live show where we go through our routines. We break down the markets. We give you all the news, all the analysis, and everything that you need. We also have some fun doing it. Matt, how you doing today, brother?
Doing really good, Tim. Just posting the podcast to Facebook, so doing good.
Stock market is dead. Long live the stock market. What? Oh, that was
we didn't pick the name.
No, we did not. Producer Mark did, but you know, it sounded. I was telling you and Cody, it sounded like a Monty Python line to me. I had fun with it. Obviously, the market is not dead here today. The market is going up.
Okay, Monty Python, I get that, but we do know he's obsessed with Game of Thrones, right? It's a Game of Thrones theme. But,
it's got to be a Game of Thrones.
No, I definitely download that podcast. So we had a lot of fun, a lot of analysis, and you know, in the feature of the podcast, we talked about, you know, theories of why markets crash, right? Mm-hmm. I mean, basically that's what we talked about. And Mark brought us 9 theories that doomsdayers like to put out there about what would cause the next market crash. And Tim and I rank them based on, you know, how accurate we feel they are. And we had a lot of fun on it. So definitely download the latest edition of the Trading Justice podcast. I believe it's episode 318.
318. Before you know it, Matt, we'll be at 350 and 400, and who knows?
We enjoy it.
It's a lot of fun. I'll tell you what, you know, the S&P here is about to break into a new high. We're at 2935. The market is got a batch of earnings. We'll talk about them specifically, but let's first just kind of break down the broad action here, Matt. We're up at what, what is that, 25 points? 0.8%.
About 23 points, about 0.8% so far. And I mean, the news of the day is a rash of earnings reports that came in, slight beats, and we'll go through them all.
Yeah. What's your reaction to this basic market upward movement? Is that expanding momentum right now, Matt? I was talking about the 25 points. It took us about 2 weeks to make a net of 25 points gain. Now we're pressing the highs. Do you expect to break out up there at 29.47?
You don't question big candles. Big candles have momentum. Momentum based on whatever you want, whatever factor, whatever news. It does not matter whether it's the algorithms or a rush of positive news coming out of earnings, which we'll go into in detail here in a moment. But you don't question big candles. They're momentum based. This market has a lot of bullish momentum behind it. We obviously slowed down as we were overextended. But like I said, you know, over the course of the last week, I liked it that the market was playing defense above 2,900. And you finally saw the breakout of the high base today. And, you know, again, whatever the news was, it does not matter. We'll get into the earnings, but that's a breakout of a high base. And yeah, you're running into that all-time high, whether it breaks it today or not. I mean, I'm not going to, you know, predict that, but I do expect a break unless we get negative news this week, but I do expect a break. You know, I think it's a most likely scenario this week.
You know, I'm looking at all the earnings today before the market. Yesterday after the market, there was a couple, Zion Bank, a few other, you know, chemical companies and whatnot. Procter & Gamble actually gapped down 2.7%. It's the biggest company who had earnings, $260 billion company. Verizon is down 1.7%. Coca-Cola, though, is running. United Tech is running. Out of all of the earnings from last night or this morning, Matt, which ones grabbed your eye the most?
The two that really stood out to me was Lockheed Martin and Twitter. And you can throw in Hasbro there as well. But you know, in terms of just the numbers, and we'll get into the actual charts here in just a second. But when you take a look at Lockheed Martin's earnings announcement, and you can see that gap and that run, and you can call that a runaway gap. And runaway gaps typically have a tendency to run away from the gap range. And when you're looking at the numbers here, beyond just the data you're seeing on the chart, 5.99 on the earnings per share versus the expectation of 4.29. Revenue came in at 14.3 versus 12.7 billion, and forward guidance was actually upgraded for Lockheed Martin. So, I mean, when you got a beat on earnings per share, a beat on forward guidance, and a beat on revenue, you're going to see this market response, and that's exactly what Lockheed did. Lockheed breaks out, it runs, now it's approaching 340. This is a runaway gap. So that really kind of stood out to me. Number one, Twitter, and let's have a conversation here on Twitter. Twitter was I took Lockheed's as a better overall earnings report than Twitter. Twitter came in at 37 cents per share versus the expectation of 15 cents a share. They destroyed earnings per share, Tim. I mean,
Mhm.
absolutely annihilation on their earnings per share. Revenue came in at 786 million versus the expectation of 774, so a slight beat on on revenue, but a destruction on earnings per share. Forward guidance, I had a little bit of concern. You can call it neutral or a slight downgrade, but I did have some concern on forward guidance. But the biggest kicker here, and the biggest reason why we saw the explosion here on Twitter was subscriber growth. It was impressive, no doubt, up 6% year over year.
Not only was it impressive, I mean, I think Twitter is moving in the right direction on a lot of their business model. There's no question about it. When you look at EPS numbers, quarter over quarter, and revenue growth and subscriber growth, they're doing something correct. I would agree with that.
Well,
Now, I'm not sure they can carry this 16%
can I
move.
push back just a little bit on that?
Yep.
And I do agree with you, but I get concerned over these numbers that are reported.
Mm-hmm.
I get concerned from the social media companies when they say Facebook has 2.4 billion, users worldwide.
Yeah.
There's 7 billion people in the world. Do we really believe that, a rock solid 35% of the entire world uses Facebook? I just don't believe that, and so I get a little concerned with the numbers, active numbers versus total users, but yeah, regardless of how you categorize it, Twitter beat it.
Yeah. Yeah, they did. I mean, sales year over year have been up. They had a dip in 2017 where they had a little bit of a correction, but 2018 was up. Now this quarter is carrying through another momentum, push. EPS in 2018 was up. From a social media perspective, Matt, they were stuck in the mud while other companies were running. It might just be playing a little bit of catch up here. And I think that the big thing is daily active users versus monthly active users. And from what I saw, their daily active user numbers were pretty strong. And I know for myself, I can just speak for my own life. I'm actually using Twitter much, much more in my own life, just as I'm seeing that interface for more than what I saw it when I originally saw Twitter, right? Even 5 years ago, I just thought Twitter was just people arguing all the time and whatnot. It's not that.
No,
I mean,
no, no. It's Facebook's for your, keeping up in date with your high school friends, right?
mhm.
Twitter is the people you want to surround yourself with.
Yep.
There's a big difference there. And I personally I use Facebook for business, but I don't use Facebook for anything else. Twitter, I use for a variety of different reasons. And I personally really enjoy using Twitter. It's a fabulous social media company, in my opinion. The question is, how do you play it? The question is, if you're looking at Twitter, I mean, it doesn't take a rocket scientist to say that's a breakout. I mean,
Correct.
and it's not just on the daily chart, Tim. If you go to this 3-year weekly chart, look at the ranges you're breaking out of here. That's a major break. That's not something just to be like, not that big of a deal. That is a major break of 35 by 30 by $36.50. Once you close above that level, I mean, the projections have to be back up into the highs. They absolutely do. The only question you have is, how do you play it and when do you play it? And from an aggressive trader's perspective, as you can see on the 15-minute chart here, and what was impressive was not just the overnight movement, but the cash open. Look at this cash open here, the momentum that carried through the cash open. You're obviously overextended up into this range. You can see the momentum kind of turn over here. And so the first type of opportunity you have is wait for that retracement to occur, or to otherwise wait for a little bit of a base and then to trigger above the high of the day on a momentum type trade. But if you don't understand how to trade momentum, this is not a trade for you.
Yeah, I would agree with that. I actually did a very aggressive trade, Matt, and I sold a bear call up on the top against it this morning, about an hour ago or so.
It just depends on your time frame. I mean,
Well,
if
it's
you're
going to be.
are you selling a monthly 30-day number? Or are you selling a 4-day number?
I did the 31-day, but I'm expecting to only be in for about a week. It's like a 2, 3, 4 day swing trade as you backfill volatility. I'll stop out literally pretty tight if the momentum continues above the high. So I'm not going to hold this.
Yeah, I don't like your side of that. I'm to the point in my life where I don't like contrarian trades.
Yeah.
I just don't. I mean, in my opinion, you're thinking you're better than the market. The
Yeah.
market is exploding up 15% today. And I'm never going to question your trading. You're an amazing trader. But for most people, that is not for you.
It's not a common entry point. I'd play off the volatility a lot of times. Whenever I have these earnings gaps, Twitter gapping 16% is not common, but you'll notice back there, here's the thing. When you had the gap down in July, it ran 2 candles in a row. So it absolutely could carry another green candle from
Yeah,
here.
but if it runs 2 candles in a row, it's going to destroy your bear call spread.
I'll stop out and I'll get out for sure. Yeah, there's no doubt about it. It's a quick volatility play, but we'll see. We'll see. I usually do that mid-morning, and after my day trading this morning, that's one that I ended up pulling the trigger on.
Well, I would say as long as it doesn't go above the high, you're fine. But if it goes above the high, you probably should stop out.
Yeah. The other one that really grabbed my attention this morning was Lockheed Martin. You had already mentioned the stock, Matt, but what a huge gap out. LMT, moving about 21 points there on a breakout and really strong.
Personally loved their earnings report. I thought it was far superior to Twitter's, and obviously Twitter's up 15% on the hypothetical growth type argument. Lockheed Martin's not a growth company, so we're talking, two vastly. You're talking Tesla versus Ford here, right? I mean, one a growth, one a value. So, but I personally speaking, I thought Lockheed Martin's earnings report was the best of the day, and I don't think it was close.
I agree. I actually loved what they had to say. And obviously that's the kind of size of company and leadership in a company that's going to grab your attention. There's no doubt about it. Hasbro, Cody brought up as well. They're not a huge company, but they did have the number one. They're only an $11 billion company, but they're on the S&P. They gapped out 16% or so. Huge movement, carry through, just runners. You did get strength and the market likes it.
Well, in Hasbro numbers came in at 21 cents versus they were expected as a negative 7-cent decline. And so not only was it a really, really, really good beat on earnings per share, but it was a negative versus a positive, which obviously that's going to be very good for the investors. Forward guidance was actually increased at Hasbro as well. One of the outside of Lockheed, Verizon had a slight increase in guidance as well. But for the most part, Lockheed, Verizon, and Hasbro were the ones that increased their guidance. Hasbro, as long as you maintain above $100, I think you can trigger on Hasbro.
Yeah, I would agree with that. Some other companies grabbing my eye on the S&P, I'll tell you, Qualcomm, just keeps running. We talked about it. How far can it move? Is it going to, carry momentum? QCOM here, they're up 5.25% again, Matt, $4 to the upside and just running and running and running. I also see Mattel, a lot of the healthcare companies are coming back. I like these bear retracements in healthcare, but they're honestly setting up for a huge week of earnings in healthcare as well. So it makes it pretty complicated in that regard. Losers on that side of it.
Yeah, no, and Emily, just to confirm, Texas Instruments reports tonight.
Yeah. Waters Corporation down 12%. Some misses here. WAT, Matt, gapping down about 31 points from a high base. They had a huge earnings last quarter. They ran off of that earnings. Now you're gapping down. Green candle is backfilling on the intraday. It's a little bit of a kiss hello in some regards because that's old resistance on many different.
Look at this on the weekly chart.
Yeah.
I mean, obviously getting smoked, but comes down into major support at 200. And then again, it's almost like algorithms know what they're doing. Hits 200. Drives back up. That's interesting. I might look into Waters Corp earnings. I don't trade this company. I don't invest in this company, but they did have a beat on earnings per share. Oh, excuse me. No, they did not. They came in under. That's what happened. Probably a little overreaction though.
Yeah, probably an overreaction. I would say that as well. And then you've got a bunch of other companies that have relatively high volume that are moving. Qualcomm, we talked about. We'll get to that when we get to the NASDAQ. Move on to the Dow Jones Industrial, if you would. Let's talk blue chip companies. Give me a read.
Same read as the S&P 500, marching towards all-time highs. Exact same read.
It is hugely strong. There's no doubt about it. I mean, I read an article at briefing.com this morning talking about blue chip, the blue chip love and how everything's just running in blue chips. Give you a few.
Well, that's what happened today, though, T.
Yeah.
I mean, it was the blue chip love today. You had, think about these blue chip companies: UTX, Coca-Cola, Verizon, Lockheed, Whirlpool, Hog, Procter and Gamble. Those types of companies, and they all had reporting on earnings. And blue chips are obviously the flavor of the day. But this entire market's euphoric today. I mean, even the Russell 2000. I mean, not only the Russell 2000 is actually leading the market. It's a bullish day.
Yeah. Give you a couple of charts grabbing my attention. Johnson & Johnson's about to break out. If they're not breaking out right now, you got a clear resistance at 140. They're up 1.95%. They already had earnings last week, kind of rattled around here for a little bit. Real strength, probably on the backs of the Procter & Gamble earnings, Coca-Cola earnings, and just market strength in general. Is that a breakout that's triggerable right now?
Close above 140 it is.
Yeah.
You close above 140, that'd be the first time you've closed above 140 this year, Tim. You have obviously major resistance at 140. You see it over here at support. Once it broke it right here, you then acted as resistance. It tested above it multiple times last week, but it could not close. You would have to see it close above that 140 and then trigger in above the day's high.
Yeah, I would agree with that. Apple Computer also catching my eye. You know, we've had this one on the option report in the past, and we had a 200 and a 207 target, Matt. We're now at 207 here. It's been running. It's got earnings coming up. Is it now time to lock in that profit? No. Let it run?
Why?
Yeah.
I mean, seriously, look what's happening on the NASDAQ. I mean, why? I mean, why? And I get the question because that's a target we have. But when you're looking at that coming into that in that 207 mark, you got a big candle. And that was my entire analysis coming over here. Big candle. You got big candles going into. Let it run. Let it run. It goes back to prospect theory, Tim. People are too quick to lock in profit, and they're not quick to lock in a loss because they don't want to take a loss. You got to let winners run. You got to let winners run. If you make 1,000 trades in this year today, if you make 1,000 trades, you're going to have some winners, you're going to have some losers, you're going to have some small gains, and you're going to have some small losses. But I'm willing to bet about 5% of your trades will make a big portion of your profit if you let them run. Let momentum play out. We talked a little bit about this yesterday when we were talking about momentum and how big does momentum play a factor. It's everything. Let momentum play. You never know what's going to happen on Apple tomorrow. Nobody does. Absolutely nobody does. We could come out tonight and we could get eBay, Texas Instruments, Snapchat, TD Ameritrade all get absolutely blasted on earnings, and the market responds and just erases everything that happened today. That could happen. That is a variable that does exist right now that we do not know. As a trader, we have to make decisions based on what we know right now. And a lot of it is based on the momentum that we see in the candlestick and the momentum we see on the chart. You got Apple right now that is literally at the high of the day. At the high of the day. There's no profit taking so far right now. Now, obviously, we have 3 hours left to go in the market, but there's no profit taking. Everybody's still buying. So why would we simply say, okay, we had a predetermined target at 207 based on a predetermined resistance level at 207 from last year. Can that act as resistance? Absolutely. Does it have to act as resistance? No, it doesn't. Remember, there is a major difference between what a catalyst is and what resistance is. Resistance is only proven when the market shows a downward movement in price. When supply outweighs demand. That is what the definition of resistance is. Resistance is not hypothetically what it was over here or what it was over here in July and November of last year. That is what is called a catalyst. A catalyst is a area on the chart where you could see resistance form, like a moving average or a Fibonacci number or a significant whole number or something along those lines. And so simply because we have a predetermined catalyst that may act as a resistance point does not mean it will be a resistance point. Again, there are two completely different competing philosophies there. And so as you're coming into this 207 mark on Apple and you have a lot of momentum behind you on Apple, and you literally just broke out of a high base 4 days ago when the potential average yield in a time perspective from support to resistance is about 10 days in Apple right now. You're only in the middle of this price movement in Apple. You certainly have momentum behind you. Maybe you adjust a stop loss underneath today's low, or you find an intraday support level to adjust the stop loss. I certainly understand that. But if you're locking in profit simply because you have profit in the face of bullish momentum, I think that's a mistake.
hmm Other charts grabbing my eye here. United Health. Take a look at this bear retracement setting up. There's so many healthcare companies that report earnings in the next 5 days. UNH already had theirs, but there are 18 that trade over a million shares a day that are over, the mid cap market size or bigger. So you've got a lot of companies in this space coming down the pipeline. I love this bear retracement. I love the old support, new resistance setup. Does the fact that the sector has so much earnings coming out this week affect your approach to a stock like this that has already had their earnings, Matt?
No, if I get a doji between anywhere between 230 and 240 and a downward movement in price,
Mm-hmm.
no, no, I'll still take the trade.
Yeah. Another one
Those
grabbing.
variables play out both ways, Tim.
Yeah, I know.
You've had a lot of negativity. Obviously, there's some bottom picking. We talked about this last week as well as earlier this week
Mm-hmm.
about how the most likely scenario in healthcare is going to be a bearish retracement, and that's what we're seeing. So if we get our bearish retracement, which we've been expecting and what we want to see occur as a trader, and I get my slowing momentum followed by a downward movement in price, is hypothetically somebody else's earnings going to stop me from doing that? No, I might be a little more cautious with how I play it, but I'm still going to play it.
Great question from Adam here. Is that a possible kiss goodbye developing? Absolutely. I mean, old support, new resistance, and especially on that weekly chart, Matt, these healthcare companies on the weekly charts, they're just rolling over and really ugly. One of the reasons why we're just so bearish on that sector.
Okay. You got obviously reversal pattern here, head and shoulders, left shoulder, head, right shoulder. You have a death cross right here. On a weekly chart, when the 20 period moving average crosses over the 50 period moving average, that is officially a death cross. One of the biggest bearish signals you can hit. Okay. As it then retraces on the weekly chart back up into resistance, say give it around 235 to 240, right? As it comes into those resistance levels and you slow down, followed by downward movement in price, you can call it a kiss of death. That's how I call it, a kiss of death. You can call it a kiss goodbye. They're both the same pattern, Adam. And yes, that's exactly what it would be. If we get the retracement on the weekly chart coming into 240, we slow down, downward movement in price, that is a kiss of death.
Mm-hmm. Couple of companies on the Dow that have earnings tomorrow morning. No Dow companies have it tonight after the bell, but two that do have it tomorrow before the market opens, Boeing and Caterpillar. Matt, I think we got to talk about Boeing a little bit. Obviously, I want to know what the financials are, what the outreach is, what their company has to say. It's going to be an interesting earnings. Boeing, by the way, their market maker expectation, as I look at this, 13.2. So the market's not pricing in extreme risk, about 4%, which is a little higher than what Boeing normally prices.
It's pretty in line.
Yeah. Yeah, it's not an extreme pricing. Maybe they're just expecting business as usual, but I do think there's volatility there. Potential for an inverted fly or something bi-directional here.
I've thought about that with Boeing quite a bit. I see so many different places Boeing could go based on so many different reasons, right? For me, I'm not going to touch Boeing's earnings. But for me, it's very important that they come out with good earnings. Yeah. At least better than the expectation on the loss of revenue from the 737 Supermax. But remember, it's not just the concerns about the 737 anymore. We had headlines yesterday about the concerns of the 787 Dreamliner in production and delivery. So I'm looking forward to reading Boeing's earnings tomorrow. But I'm not looking to trade at this today.
Yeah, Caterpillar earnings as well. Obviously, an industrial company like Caterpillar, when you're talking about trade wars and tariffs and international slowdowns, they've not performed as well the last year or so as some of the other tech companies and whatnot. But now we're looking at clarity in some of those areas, and maybe the market is starting to move bullish. Caterpillar is one that I love the company. I haven't traded it in a little bit of time now, but the earnings might give us some kind of spark one way or the other. Any anticipation for Cat?
Oh, it's just going to be a major day for the industrial sector. It's going to be a major day for the Dow Jones tomorrow. I mean, when you got two behemoths like Caterpillar and Boeing both reporting, expect some fireworks.
That's right. Let's move on to the NASDAQ 100, if you would, the NQ contract, and it is a juggernaut. Matt, technology has been one of our strongest.
Can I ask you a question? Why do you and I inherently like companies like Caterpillar? I mean, seriously, because both of us, we don't invest in Caterpillar. Neither one of us have traded Caterpillar very much in the last 2 years.
Yeah.
but we inherently like Caterpillar. I mean, our whole lives we've liked Caterpillar.
I like stuff.
I like
I like
big
building stuff, and I
machines.
like industrial equipment, and
I
I
like digging in a dirt hill somewhere.
damn straight. I
You're
like
your
tractors.
dad is who you are.
I do. I like, well, and first of all, Caterpillar is a reflection of industrial production. And when economies are strong, usually companies like that do, they're
Yeah.
going to lead markets. You know,
Well,
it's a
it,
part
it
of market
just
cycles.
we love Caterpillar. It's a great American company. I agree with Adam. And yes, Jonathan, we absolutely have our biases. There's no
Yeah.
doubt about that. But our father, when he started his first construction company, he bought a backhoe. We didn't see him for 2 days. He went up, we lived on a hill. He drove the backhoe up on the hill and decided to remove some of the hill that kids would drive like motorcycles and four-wheelers, and he thought he'd make it safer. He made it far more dangerous. But ever since then, we've loved Caterpillar.
That was a funny decision the old man made.
Oh, the old man. Oh,
First
old
of all,
man.
there's a financial lesson in that. You know, I remember at the time, Matt, it was probably the biggest purchase our construction company had made up to
Oh,
that
it was
point.
$75,000. Yeah.
You know, there's no question. And we were building spec homes, you know, through the summer. We basically had a crew of about less than 10, mostly just the boys. And
Well, like I've always said, my dad had 6 sons so he could get free labor.
that's right. He raised cattle as well at one point, just so he could see
That
if we
wasn't
could do it.
that wasn't a wise decision
That
either.
didn't make him a lot of money. He was not good at that. But that tractor did improve.
That tractor lasted for 15 years.
Yeah.
Right. I mean, it was great, but that's why we love Caterpillar. But yeah, so Caterpillar and Boeing both announcing tomorrow's earnings. Look for some fireworks in the Dow. Let's move on to the NASDAQ.
All right. NASDAQ 100 NQ contract.
Don't get
And
me wrong, I could tell stories about the old man all day long.
you didn't want to. You just changed the topic.
Well, you know,
You asked me the question. You got all nostalgic.
know,
You're like, hey, let's talk tractors. And then, no.
Listen,
Oh, no. Tim has a thought.
tractors
Well, let's
all
not.
day long. You want to talk about how redneck cowboys we are? I'm fine.
Give me a
with that.
chart on John Deere. You want to talk about tractor company, Caterpillar or John Deere? All right. We'll see how.
Yeah.
And Hog had earnings today as well. So,
Oh, yeah.
who's the more American brand, Harley Davidson or
Okay.
John Deere?
What game are we playing?
Which one? Locked in. I'll give you two
Locked in.
choices. You got to pick one. You tell me what's a more American brand. Okay. John Deere or Harley Davidson?
There's only one answer to that question.
It's closer than you think, young man. All right, I'm locked in.
Okay. I think you're going to say John Deere because Hog moved their production to Europe is what I think you're going to say. That's my guess.
No, Hog.
Really?
Yeah, but
people
it's
have
close.
brand loyalty. It's close. They're both right up there. There's no doubt about it. Matt, the NASDAQ strength is incredible. You know,
but I love John Deere and Caterpillar.
Yep. Yeah. What's going on here? Are we going to just keep running parabolic?
Tim, how many times do we have to say it? The NASDAQ is euphoric. It's been the number one on our board for at least a month and a half, maybe even 2 months now. But no, Hog did not quit the U.S. Stop getting our information from Twitter. Hog did not quit the U.S. Wow. Even Donald Trump came to Hog's defense earlier today when he talked about putting tariffs on Europe. Come on. Anyways, it's parabolic. It's euphoric. It's irrational. It's whatever you want to call it. It's got tremendous momentum. You just broke out of the all-time high here on the NASDAQ. If you look at the 3-year weekly, look at that, Tim.
Mm-hmm.
Only 1 week in the last 16 have we not had price appreciation on the NASDAQ. You can't say that about the other indexes. You literally just a week ago broke this level. Oh, excuse me, that was just this week. So in terms of this, you just have a tremendous amount of momentum on the NASDAQ right now. This V-shaped recovery is historic in my opinion, but specifically on the actual NASDAQ, I'm not going to question that momentum, Tim. Not at all. Eventually, you're gonna retrace, no doubt. It has to do it. It's completely overextended on every single metric that you can look at, whether it's an RSI, potential average yield, extended trend lines, Fibonacci extensions, you name it. It's overextended. But at the end of the day, sometimes you just got to ride the train.
Yeah. You know, many companies grabbing my eye. We already talked about Hasbro. Roku, actually. Roku just had a new analyst initiate coverage and recommended a buy rating, obviously kind of like an upgrade here in some ways. But this is a new analyst for them. ROKU is up Oh, 5.9%. They don't have earnings till May 8th either, Matt. Very complex pattern.
Hold on, what stock are we looking at? I was enjoying the debate on Harley Davidson in the chat.
I got a story about Harley Davidson as well, if you want it.
Not right now.
All right. Well,
I agree with
it's a
Paul
short
though.
one.
You buy him for the sound. Electric Harley is an oxymoron. I agree with Marie. It makes me sad to my heart.
My poor father-in-law bought a Harley once, thought it was a Harley, and it wasn't. Once they actually started breaking down into it,
Oh,
somebody
you're
rehabbed
kidding me.
it. Yeah, it is what it
Are
is.
you talking Roku?
Roku next, yes. Roku complex pattern here, Matt. Upgrade. They actually had a coverage initiated by a new analyst firm, and they initiated a buy rating. They've got earnings coming out. That's a complex pattern. It was a runner there early in the year. Anything to see here?
No.
Yeah, Qualcomm is running. I talked about it earlier, Matt, carrying through 5%. QCOM, if you would.
Marie, I'm sorry. The chat is piquing my interest. Marie's killing it over there.
Yeah.
All right, I'm focused now. Focused now.
Get a chart on Qualcomm. It's up 5%. I wondered if it was going to slow down. It does not want to stop.
No.
Is this short covering or the short sell? If there were, first of all, I got to look up the short interest now. If you're short Qualcomm, dude, the short float is 2%. I want to meet the 2% of people.
That's not short covering.
Yeah.
I mean, you got 1.9% on the short float outstanding, 1.2 billion. Nah, that's not short covering.
Probably not.
Short covering would have happened here and here. That is momentum, is what that is, Tim. That is the NASDAQ deciding to say, we are the NASDAQ. That is, we're breaking out of the intraday highs. That is momentum. That is why you let momentum play out, Tim. Don't second guess momentum.
Another company grabbing my attention here today. I actually already did buy this company, OKTA. It was on our reports over the last weekend. OKTA breaking into a new high, had a pivot yesterday, and now it's carrying through today here, Matt. Just beautiful setup, beautiful momentum.
You know, that was my find, by the way. Thank you.
Yeah.
You're welcome.
Great job bird dogging that. I mean, that's what the reports are. You've got to get those reports ready for Monday morning. You could have missed this trigger. There's no question about it. You know,
well, if you miss the trigger off the hammer, that's
another trigger today.
But there's another trigger today breaking out of the high, and there might be a third trigger if we base and break 100. So I mean, there's not just one trigger on things, guys. I mean, if you miss the hammer candle upward movement in price, you got the breakout, and then you have the breakout of 100. So you just got to reassess. But you know, trading, Tim, I mean, trading, you have to be present. It's not automated. You have to do your routine on a daily basis. You have to go through and analyze the markets and look at your delta numbers and look at your theta numbers, and you know, make sure that you're working your watch list. And that's what the scouting reports are. They're not trade advice, they're watch list, and they're watch list based on, you know, technical systems. And you gotta go through that on a daily basis. Tim, how long does it take you to go through your watch list on a daily basis? Not day trading, I'm talking swing trading, okay? Because that's what the scouting reports are, swing trading. So how long does that take you on a daily basis just to look at them on a daily basis?
Well, just the bull and bear, I'd say 5 minutes. I mean, I just go
5 minutes. Are you kidding me?
Yeah.
I spent 30 seconds today.
Yeah, I just go through every chart. Probably 5 minutes for the bull.
Click the button, you find the signal, and you put it on, put the trade on.
It doesn't take a lot of time. It shouldn't, because you've already done all the work, right? You've already prepped all those trades. It just comes down to executing it.
I just looked at all the trades on the stock report.
How long was that? You should have told me timer. I would have put a timer on. 10 seconds.
It was 10 seconds.
Yeah.
It was 10 seconds.
But my Wi-Fi doesn't click those charts in as fast as yours. So maybe it's
because you have Comcast. What's wrong with you?
But give me a chart on Tilray, if you would here, Matt. These, you know, marijuana stocks, I actually put a video out there. We're going to be putting it on Instagram here. They've just been mixed. Some of them are very, very strong right now, but Tilray has been just taking it on the chin here. Low base. If that broke below support down there, is that tradable?
Well, whoever bought at 300 should buy at 50. they should dollar cost average that. Ask your question again.
Is it tradable if it breaks down?
Yes, of course, 100%. I thought you were going to ask me if it's tradable if it breaks out. No. You have momentum in trend. You have a low base type technical formation happening in this. The most likely scenario is we fade and then break. Now, obviously, you never touch it before that, but if you break this down, 30-minute chart, find your intraday support zone that you want to trigger under. Most likely that would be, since you have 2 ticks here on a 30-minute chart, most likely that would be 47.68. Wait for that to occur. You got plenty of time in between, in front of earnings.
A few NASDAQ companies with earnings after the bell: Texas Instruments, Ameritrade, and eBay, all are going to grab my attention. TXN, the biggest.
Which one are you most excited for tonight?
I'm probably going to trade eBay because the volatility projections are higher. Texas Instruments is the most important to the market just because they're the bigger company.
Agreed.
Yeah. TXN can lead the market where eBay probably not. I mean, it's a $30 billion retail company. eBay could miss and the market still could be fine.
eBay's Hasbro's earnings, I didn't even care.
Yeah.
Texas Instruments, that's the number one for tonight's Texas. But I'll tell you the one I'm most looking forward to. Snapchat.
Yeah.
Here's why. Not because I like this company. It's a horrible company. But here's why. Snapchat year to date, Tim, is up about 100%. 100%. You better wow in your earnings. You better do really good in your earnings.
If Snapchat gaps 25% of the upside, will you open a Snapchat account?
Technically, I think I have one.
Will you put a Snapchat out there?
I don't know how to log into Snapchat. I didn't open up my Snapchat. Are you kidding me? I think Jessica opened up my Snapchat or something like that.
Dude, millennials love it though. I got to tell you, my 18-year-old daughter's on Snapchat all dang day.
That's fine. Millennials grow up, and your daughter's not a millennial. She's Generation Z.
What is that? Gen Z? Yeah, Gen Z loves it.
The zombie generation.
Thank you for that, Matt, because I get tired of people putting high school kids right now doing stupid stuff and millennials.
Because you're a millennial and you already hate the younger generation. See, my generation hates your generation, and the baby boomers hate my generation. That's just how it works.
Yeah,
that's just how it works. But high school kids, I don't know what the actual age, but high school kids now are Generation Z. I think millennials are like 21 or 22 at this point.
Isn't there a Gen Y? Is it Gen Y? Gen Z? I don't know. I don't know all these generations. We need new names for the generation.
Gen Y millennials are Y.
Millennials are Y.
Yeah.
We're Generation X.
Yeah.
XYZ. All right, now it's starting to make sense.
You finally figured this one out, huh?
Biogen tomorrow morning.
Oh, those Gen X's. I mean, they're a little slow.
We are a little slow.
They are. We are a little slow. There's no doubt about that.
BMAT, biotech companies have been really beaten up recently. Biogen is one of the biggest there is out there. They're always a leadership in this space. They had real negative news, catastrophic gap last quarter. And I'll tell you, I mean, their earnings is usually not as big as the news. You see bigger gaps on Biogen around just their drug news. Any expectation here for this stock?
After the failure of the, I forget what the actual drug name was, but they were in phase 3 trials. And after the failure of that phase 3 trial, this one's a big deal. Same thing with Snap. When you have a massive movement one way or the other in a short time period, and you're now reporting earnings, I think there's an added emphasis on the report. Snapchat's got to wow. Biogen doesn't have to wow.
And we might be burying the lead here as far as this real size of these companies. Amazon's up 2.14% today. You want to wonder why the NASDAQ's running. Look at the leadership here. I mean, and they've got earnings coming up here. And I believe it's going to be on Wednesday after the bell. It might be Thursday, though. What's the earnings date on that thing, Matt?
I think it's Thursday.
25 AMC. So Thursday after the bell, you have Amazon earnings. Running in the face of that, Google's up 1.5%. Apple's strong, but this Amazon breakout was real. We talked about it. It did run and made a nice move, very significant. But now we're heading into earnings in 2 days. Any read here on Amazon?
Nah, you're too close in between. You got earnings in 2 days. I mean, there's day trading opportunities there, but there's nothing holding overnight at this point.
Yeah, I would agree with that. Google also near an all-time high. Google's just looking very, very strong. We've had this debate many times. What company would you buy? I like Google quite a bit. Google now almost 1291 is the all-time high. The NASDAQ is hitting an all-time high, but just leadership at the top as well, Matt. This whole market is running with blue chips.
Yeah, it is. It loves
Yeah.
the blue chips right now. No doubt.
RTY, real quick one. This one actually is coming back here a little bit here today, but still
Showing
in
some
trend.
strength.
A lot of strength, pressing 1600. Breakout is significant. Pay attention to it and have a plan on it. It's not broken out yet. Nothing to see here. Move on to the dollar.
You stole my line.
I did. Yes,
Okay.
I did. I did.
Okay.
Dollar sign DXY.
That's the lead today, by the way.
Breakout.
It's not yet. It's not yet. It's got to close above 97.70 to be a breakout. You're at 97.64. You obviously tested the breakout channel here earlier today. Little surprising movement given the fact that we have two major banks reporting central bank policy tomorrow, the Bank of Japan and the Bank of Canada. But unexpectedly, well, I shouldn't say unexpectedly because we should expect negative news coming out of the Eurozone. So expected news out of the Eurozone that they got some banking problems out of the Eurozone, and the dollar responded very positively in that. But Tim, what was the interesting thing is the biggest movement that we saw was against the Swiss franc. Swiss franc just got absolutely destroyed by the dollar today, and quite frankly took it on the chin on some other areas as well. So you got a lot of strong movements coming into the dollar, and I don't trade the dollar Swiss franc pair like literally ever, but the one I talked about this week, guys, and this is why you watch the Forex report, and this is why you come to the halftime show, is I talked about a close underneath 130. We got that on the pound dollar, and you should be seeing some momentum to the downside with the British pound.
The New Zealand dollar breakdown was significant. Now you got all this economic data, Matt, approaching all of it. You mean, obviously significance here, there's no question. That NZD one was a really, really good sell-off. GBP now breaking down as well. Which one is the weakest of the other currencies, in your opinion?
Swiss franc right now.
Yeah, the Swissy.
I mean, Swiss took it on chin. Aussie took it on chin a little bit today as well. But something's going on with the Swiss franc right now, and I don't have inside information there. It just feels something's wrong with the Swiss franc right now. Dollar's breaking and running, but like I said, if the dollar does close above 97.70, I'll switch the dollar from positive 25 to about positive 15.
Yeah. Move on to the commodities market, and crude oil. It is carrying through about 1%, obviously, after that news. Significant bullish trend here. What you read on crude?
Just continuation of the momentum we saw yesterday. I mean, we had a real good price movement in the morning here today. And then news just right before we got on to the halftime report, news came out that Saudi Arabia is looking to increase supply in May, and they stated that was not in response to what Trump said yesterday. That was a planned increase in supply that was already kind of priced in. I'm not sure that's the case. I think it was something. I think Trump owns the Saudis, and so I do think it was a response to what Trump was talking about yesterday. So put a little bit of a damper on the bullish parade that started really kind of yesterday with the Trump news that they're not going to extend the waivers to the 8 countries from purchasing oil from Iran. So, yeah, but even with that news coming out midday today, still bullish, still very bullish. Probably, you can make a very, very strong argument that it is the most bullish instrument in the market right now.
Yeah. Well, that and gasoline. Obviously, gasoline's been real strong there as well.
Crude, gas.
The energy area, except for natural gas. I'll bring up NG if you would. And the UNG is one of my favorite ETFs that I've avoided now for quite some time because of what we've talked about in this halftime report. About
I haven't touched it in 6 months, Tim.
But man, that thing is breaking down, Matt. Those are tradable signals. I mean,
both me and Mark, when we were ranking this in the commodity report on Thursday, both me and Mark had it in the end zone.
Mm-hmm.
I mean, not the positive one.
No.
Like seriously, -3 bearish territory. We offset that a little bit just because of some of the other rankings, but both of us felt like a close under 250 was very, very significant, and you're seeing follow through here today.
Quick look at gold and silver, if you would. Gold down about 0.25%, but silver down 1%. They've both been fading. We've been talking about it. We've moved them into bearish territory. Here's the thing, guys. You can't trade your bias. We love metals, but when they're bearish, just like last summer when they were bearish, we were bearish. And now that they're bullish in the fall and in the spring, we went there. Matt, this is now breaking down, showing weakness. What you read?
Just that. I mean,
Same thing.
Head and shoulders break of support. violated the neckline, closed under 1280, dollar punching up against resistance, perhaps with a potential breakout today. There's no way you should touch gold or silver right now.
Yeah, and
not from a paper perspective. If somebody comes to me and like, hey man, I don't mind buying physical silver at these price points, I'd be perfectly fine with that. But as a trader, if you're trading the paper, oh yeah, this is a complete and utter stay away right now.
Mm-hmm. Give me a quick peek at Bitcoin breaking out, heading towards 6,000 here. We're at 5,600 right now, or near it. I got to tell you, again,
Caught that breakout, baby.
That is a high base breakout, and we talked about it. We identified it. Chart is a chart is a chart, Matt. Maybe some normalcy back in the crypto markets.
Hey, if you don't remember, I called this breakout too. Yeah. And I called this breakout here. So yeah, I'm getting very, very, very close to doing it, T. I haven't traded Bitcoin since.
It's been a bit.
I capitulated and got out of the insanity, I want to say late summer 17.
Mm-hmm.
And once I found out it was going to be introduced into the futures market, I just knew what would happen. I just had a feeling. I've seen this play out too many times. The market, the algorithms, the banks, the hedge funds, once an instrument is in the actual stock market
mm-hmm.
or the futures market, oh, the level of manipulation that they can play out is really kind of amazing. But you've obviously started to bottom out here. Is this a recovery or just that's
6,000 is too important? We can't call it long term until it breaks above 6,000. You know, and
yeah,
like it's unestablished.
But you certainly can trade it between 5,500 and 6,000, though.
I would agree with that.
I'm saying it's been about close to a year and a half for me that I have been complete stay away from Bitcoin. And I first traded Bitcoin, I believe, in 13. I think it was the first time I traded Bitcoin was in 2013. So I'm interested. I was an early adopter the same way you were here with Bitcoin, Tim. I remember you and I talking about Bitcoin extensively on the podcast, in our trainings, in 13, 14, 15. So it's something I certainly embraced early on. But the insanity of 18 was so crazy. 17 and 18 was so crazy. Is it back? What do you think?
Not all the way for me, but it's getting there. I'm getting much.
But you're asking me to analyze it almost every day.
I know. You know, and
it's obviously in the conscious.
It is. I'm paying attention to it. I'm focused on it. I'm interested. I do believe in the long-term tech. I've always made that argument. I don't, I know there's complexity in the crypto markets, but we're looking at it every day. And Matt, it's showing me there's a reason why we're looking at it. The market will tell you when to pay attention.
I agree.
The market will always tell you when to pay attention to, for good and for bad. And right now it's showing you strength and bullishness as we're breaking above a high base.
Well, and if you, it's okay to miss this right here if you have doubts about it. You know what I mean? It's perfectly okay to say, you know what, I want to see it close above 6,000, then retest that 6,000 mark. It's okay to say that. There's nothing wrong with that. And I think that's what I'm going to do.
Yeah,
I'm going to wait.
Probably not the wrong.
I'm going to wait.
Right call.
I'm going to wait for a break of 6,000. If you break 6,000, that's certainly triggerable. But I think the best confirmation on this, Tim, would not be a break of 6,000, but that first retracement where it tests 6,000 and plays defense. If you can play defense at 6,000, I think at that point you can start saying where Bitcoin's back to being tradable.
I agree with that. And guys, that is our Skyline feature for today. And what we're going to do next is actually we're going to do what's called a bull call spread. You know, Matt, we've designed the halftime report to kind of have themes that we hit most of them Monday, Tuesday, Wednesday, Thursday, Friday. And Tuesday we've identified as Delta Tuesday. And we're talking in pre-production, what do we want to do here today? And one of my favorite Delta strategies is a very simple one. Intermediate level, I would guess, would probably be an appropriate way to say it, but it's called a bull call debit spread. And you asked me, well, Tim, what stock? And actually, for me, I like Baidu right now, BIDU. It's got a reversal pattern. You still have upside. It's got earnings out in early May. So you still got about, 3 weeks of time to execute a trade here. Talk high level, 5 minutes, 8 minutes, something like that, just what bull call spreads are, and then how do we design them and what the reason and role they play in a portfolio.
Bull call spreads are the conservative version of buying a call option, is basically what it is. So the most aggressive form of trading directionally is simply buying calls and buying puts. And what a lot of traders, as you advance in your skill set and your knowledge base and your education, what a lot of traders start doing and what they start learning how to do is start to offset cost and offset risk. And so when you're buying a call option, obviously, as it's an aggressive position, you have increased risk and you have increased costs. So what we do with the bull call spread is we simply sell a call option against the call option we're buying to create a spread. And as we're selling a call option, we're bringing in a little bit of cash flow. And as that's doing, that's offsetting our total cost, driving our total debit lower. And as we're selling something against the position, as we're lowering our costs, we're also lowering our risk. Now, my personal rules when I'm buying call options is I buy 2 months plus expectation, even if I'm only willing to hold two weeks. I buy 2 months plus expectation. I buy a delta of right around 0.60.
Mm-hmm.
Whether that's a 5.8, 6.2, 5.5, I don't care. Sometimes I'll check the liquidity. Well, not sometimes. Almost every time I'll check the liquidity to see which one I actually want to trade. Obviously, I would prefer higher liquid strike prices. So if I have a higher liquid strike price at a 5.2 delta versus a 6.2 delta, I'll do the 5.2 delta. But it's the rule starts with right around 0.60. Now, in bull call spreads, though, we like to modify those rules. And so what you start with is you keep the same time rule, right? You keep the same 2 months plus expectation time rule. And then you simply adjust your delta rules. And so you start with your delta and you start with buying a delta right around 0.50. So I want everybody to write down in chat on your delta rules, you start with buying a call option with a delta right around 0.50. You then sell a delta strike price with a delta right around 0.25. What you're trying to capture is right around 25 delta is what you're trying to capture, which means you're trying to capture about 25% of the price movement. But and you might think, well, that's only 25% of the price movement. Well, that's fine. You're lowering your cost and thus lowering your effective risk. So the first thing we do is we prep the trade the same way we always do it. I love the support bounce, love the confirmation above the weekly highs here. That's confirmation, which means we can trigger into a trade. So the first target I'm going to put out here, Tim, is 185. Mm-hmm. And that's a very important target, and I'll talk about that here in a little bit. The second target you have above that 185 is probably right here in the 195 level, in my opinion. And the reason 195 is you can kind of see this old resistance here, old resistance. So I'm simply looking at those old resistance zones to find that secondary target. The first target is my real target here, Tim, and the reason is this little icon right there. Okay, I'm going to let the momentum, I'm going to read the momentum when it does it, but it has to happen before this date, right? It has to happen before that date. You got to get your price move before that date. So what I'm looking at doing is I'm looking at buying this off that reversal pattern. You broke out of that reversal pattern. You retested the breakout channel. You played defense at 170, the breakout channel. You upward movement in price. That is a really good trigger on a bullish retracement off of reversal pattern. So now I got my confirmation. I'm going to put my stop loss underneath 168, Tim. The reason I'm going to put my stop loss under 168 is, as you can see, if I drop this down into a 30-minute chart, look at the evidence at 168. Look at the evidence. Now, you might say, hey, Matt, but you got 167.40. Yeah, that's fine. I'm not going to put my stop loss at 168. I'm going to put my stop loss 1/2 the ATR underneath 168. So 1/2 the ATR, help me understand this. 1/2 450, that's 225. 225 underneath 168 would be 165.75.
Correct. Yes.
I can do math.
We didn't need a math fight there. You got it.
I can do math. I can do 2 + 2.
Well, I can 8 minus 2.25.
No, I figured it out. You do math because it'd be 65. Yes,
what's wrong with you?
168
minus 225 is 165.75.
No, it's 165.75. Excuse me. I thought you said
wrong with you?
75.
Cody,
go on mute.
Cody, just back down.
Math fight, Cody. Generation.
I heard 166.75, and I'm like, no, wait, y'all are off by $1.
Yeah.
I do speak Utah. Now, in terms of this, okay. Thank you, Brian. In terms of this, now I've prepped the trade. I go to the Analyze tab. Okay, now 2 months plus expectation. Remember, 2 months plus expectation here, ladies and gentlemen. I'm going to go down to the 87 day contract. That gives me plenty of time before the earnings that theta is not going to decay me. I drop down that. I go find my delta. I got a 5.2 delta there at the 175 contract, Tim. So I got a 5.2 delta. My contract's the 175. Now, I want to come and get somewhere around a net 0.25 delta, right? A net 0.25 delta. So if I come and I sell this 29 delta there, I'm going to bring in a little bit more cash flow to offset my risk and offset my cost. That gives me an effective net delta of 0.23. Tim, I got another option here to 0.23 delta. So if I sold that 0.23 delta, I'm only going to bring in about $310, $315 to offset the $975 of cost. So as you can see, if I sell the 29 delta contract, I'm going to bring in more to offset the cost, which will drive down my cost to around $5 versus driving my cost down to around $6, right? Mm-hmm. How do you go about making that decision when you're looking at, you know, a situation like Baidu, where you can sell the 190 call option to bring in a little bit higher cash flow to offset the cost versus the 23 delta, which would give you less cash flow to offset the cost, but you have a higher total return?
Instinctively, I'll want to use, you know, something that I think that the short strike can be reached at. So if my target, what were the targets you had here?
185 by 195.
I'd probably use 195 then. I mean, they're both within the delta range. You know, the 25 delta split, you're going to get, you know, near that or above that on both of them. And then I would probably build them both and look at the cost relative to the spread size. One thing that one of my mentors taught me a long time ago, Matt, is don't spend more than 40% of the spread, you know, when they're designed like this. So I would then look at that relative cost. The 175, let's see here, 195, start with that one.
663
on a $20 spread is actually pretty cheap for a bull call. So I like it. I would probably go with that one. You know,
explain that to the crew though. When you're talking about 40% of the spread, some people might not have understood what you meant.
So there's two strikes in the bull call spread. You have a long call and a short call. The long call anchors the trade. Okay. That's the actual more valuable one. You're buying a higher delta. The short call is where you collect the cash flow to offset theta to make sure you're not killing your theta number in your account when you're delta trading. A lot of theory there, but let me make it simple. 175 strike to 195 strike is 20 points. So a trader would call that a 20-point spread, right? Between strike to strike. And then I look at the cost of 6.63 relative to the 20. So the percentage cost against 20 lets me know how much money I can make and how much money I can lose. When you do a bull call spread, you have limited reward. The most that spread will ever be worth, unless there's some weird arbitrage or something, but leave that out of here, is 20 points. And that's if it was at expiration. So I know now what my cost is. It's kind of like if you think about like a cup, it's how much of the cup is full of water and how much more water can you put in the cup, right? So you have 40% or less that you want to make sure that you're not spending so that you can fill the rest of that up with profit. So hopefully that made a little bit of sense, but that's the nature of what we're looking at.
And if you're 45% of spread or 35% of spread, you're in the zone, but just make sure you're not paying too much premium.
You don't want to pay 60% of the spread.
Exactly.
55. I mean, you have to look at the number.
You got to keep it under 50, but you probably want to keep it under 40, right?
Yeah, that's right.
This is kind of in that range here. And I love what you said about the selling of the call option to brings in positive theta to offset some of your negative theta as well. That's another benefit of that, of the bull call spread. So we're looking at total cost in the trade, 663, our 165.75.
I don't know. Let's ask Cody for confirmation. Cody, you got a calculator over there in Hawaii?
Hey, Cody, when you lose a math fight, you don't come clean out of it. I've lost enough math fights in my life to realize that. Total return versus risk is 200 versus 600.
Well, and think about it, Matt. The most important number. So the reward to risk is good. The chart is good. It's a qualified trade. We don't know the future, obviously, but it's a qualified trade. But here's the most important number for a portfolio and a trader is 212 expected PL loss if you hit your stop loss. Okay.
Yeah.
And if you look at the theta number, Matt, the theta on the regular long call would have been -6 or 7, whereas the theta on the bull call is only -2.
You offset 66% of your negative theta here. And that's probably the most important thing to realize here is that simply by doing the bull call spread, you're literally offsetting 66% of one of the guarantees to the risk of this trade, and that is time. And that's a very, very, very important thing to understand, is that the bull call spread is not just about reducing cost and thus reducing risk. It's also about reducing theta and mitigate the risk to theta as well.
Yep. I love it. Great job, Matt, on that one. By the way, just as a reminder, programming note, tomorrow we're going to be prepping Tesla earnings. TSLA has earnings after the bell tomorrow, Matt. I know that Elon Musk, I saw an opinion on Market Watch where Market Watch just said Elon is just another used car salesman. And it kind of feels like that. He's just pitching his product and his brand.
Constantly trying to be in the spotlight. Like
Jim Cramer called him, what's his name from the circus?
Barnum and Bailey.
Yes, called him that today.
Yeah,
that was offensive.
Barnum.
To Barnum. Yes, that was offensive to Barnum. But yesterday, they're now going to compete with NVIDIA and chips. Really? Really?
Listen, whatever they got to do to get some.
Didn't Apple just capitulate on that literally last week with Qualcomm?
I know the gimmick Tesla is.
But no, I'm serious. It's a serious question. Didn't Apple literally capitulate to Qualcomm? We're talking Apple, the $1 trillion company Apple. They literally just capitulated on chip manufacturing to Qualcomm because Qualcomm's better. Now Tesla decides to compete with NVIDIA from a chip manufacturing. And if we don't buy a Tesla car, Elon, it's like we'll be riding a horse in 3 years.
Listen, I still believe
I'm not done. Cars will be without pedals and steering wheels by 2021, and the robo taxis ready by 2020. Yeah, we're prepping Elon tomorrow.
Oh, there's a bullish case for Tesla, but it's on the podcast. It's not.
There's a bullish case for Tesla only if you're talking to Tesla fanboys.
Dude, 2014 they had $3 billion in revenue. 2015,
you know what the bullish case is? The bullish case is they convince Elon to step down.
That's the bullish case.
I don't think so.
That's the bullish case.
I do.
They got to stop all the gimmicks. I mean, quite frankly, they got to focus on the
gimmicks. Tim.
I understand. Debate it tomorrow. Table it. Tesla tomorrow. We'll be doing that.
Pause before you tear out of here. Herman Cain is withdrawing his name from the Fed because he's not going to get paid enough money. That was a joke. Next, Tim, first YouTube. We're sitting here on YouTube. How amazing is YouTube, guys? First YouTube video was uploaded today, 14 years ago. And Tim, can you guess what that video was?
The first YouTube video ever uploaded.
I saw this on the news yesterday.
14 years ago was 2005.
14 years ago today. First video. It's an 18-second video.
Was it the planes flying into the towers?
No.
I mean, it's
dark thought.
Okay.
It was a guy looking at an elephant trunk.
so not like the most important. I went from 9/11 to elephant trunk videos.
Yeah, you thought way too highly of consumers using YouTube on that one, brother.
Also, a quick math fight. 14 years ago, not 2001.
I said 2005, Cody, and they could have uploaded the videos as the first video.
That was a good attempt to get that on your math fight there, Cody.
It's true. It's true.
Outside of that, again, earnings tonight, Texas Instruments, eBay, TD Ameritrade, Snapchat. Keep your eyes on those.
Yeah.
Real quick, most companies today positive on their earnings reports. Slight beats, but they're beats anyways.
Guys, if you're watching this show right now, your halftime crew, punch in the chat, hashtag Team Tackle. Let's get that vibe, that energy, that positivity out there. Love you guys. Thanks for being here each and every day. You know, I was talking to a student today, Matt, who basically his first year of education, he never really put the time in, you know, And the first thought he had was, well, Tim, obviously this isn't for me. And he was getting down on himself. And I said, listen, just get focused on your daily routine. I invited him to the halftime report every day. We're building that routine out with people. It's very important. If you want to be a trader, show up, put your butt in the seat, and don't make any excuses. Run your systems, learn to trade, and get good at this stuff. There's no question about it. You guys are the best. If you're watching us, last bit, subscribe and click the bell. Make sure you're alerted of upcoming shows, and we'll see you. Coach's show tonight, Trading Lounge tomorrow, and then we're prepping and fighting over Tesla tomorrow as well. Guys, we'll see you tomorrow. Great job, Matt. Great job. Well, kind of good job, Cody. Great job on the prep. Great job on everything else. That math bit.
Your prep was probably the best prep you've ever done today.
Fantastic job.
Effort today was one of your worst performances. I cannot believe you tried to call me on the math fight.
I promise I heard the wrong number, but I digress. I'll take the mistake. I'll admit I was wrong.
All right.
I'll be humble.
All right. Good job, Generation Z there, Cody.
Yeah.
Later, cats.
Yeah. All right. See